In this market, the customer is always right. That's why Netflix imploded when it upset its subscriber base. It's why Chipotle, which knows how to connect with customers like no other, soared after reporting a terrific quarter last week. And it's why Panera Bread zoomed higher today, rallying $17.92, or 15.5%, after it delivered a knockout number last night. The customers love Panera. The company's bakery cafes are consistently rated the most popular casual quick-serve restaurant in America, with some of the most loyal out there, including yours truly and my kids. These guys understand that serving high-quality, delicious, healthy food with bread crafted from scratch daily is a great recipe for success. Yet the stock's constantly underestimated by the analysts because they can't build an earnings model based on customer loyalty. They don't get it. They don't know how to discount great food or a company that understands hospitality, and I bet you they don't go there, unlike me. That's how Panera could blow away the numbers last night. Company delivered a 3-cent earnings beat off a 93-cent basis on stronger-than-expected revenues that rose 21.8% year-over-year. Plus, Panera's same-store sales grew by 6% when the street was looking for only a 4.8% increase. Well, what really sent the stock flying was the guidance, both for the next quarter and the next year. It came in higher than what the analysts were looking for. And I think Panera's guidance is actually still pretty conservative. I think they can beat it. So, stocks had a big run, and an even bigger one since I first got behind it in July 2008 at $48 and change for a 178% gain when my daughter said this is where we're going to eat for lunch from now on. I think there could be more upside ahead as Panera keeps drawing in customers and putting up new locations. Don't take my word for it. Let's go straight to the horse's mouth and talk to Ron Shaich, founder and executive chairman of Panera Bread, to learn more about the quarter and what he sees going forward. Mr. Shaich, welcome back to Mad Money.
Hey, Jim, how you doing? You told them we'd do it, and we did, huh?
I got to tell you, sometimes people are too negative in this country, my friend, because here you go. People looking for 4.8%. You finished up with 7.8% comp store sales. That puts you in elite category with maybe one or two others that I deal with. What happened as the quarter progressed that people just kept coming and coming?
Yeah. Hey, Jim, just to be clear, 6% in the quarter, 6.7% for the first 27 days of the fourth quarter. But look, people are reacting to what we're doing. They're reacting to the food. They're engaged with our loyalty program. Our media efforts are working, and our ops continues to matter. The bottom line on the whole Panera experience is that taken together, this means more to people. They come, they act, they vote with.
But, there were things, I sold up 17. I said to myself, geez, when I was on the call, I heard things that, frankly, you talked about for the first time, we could actually expect negative operating leverage. Now, why aren't people more worried about that?
Well, I think people get the long-term success of Panera. We have felt for a very long time, don't look at us in any given quarter. Look at us over a long period of time. And what you see is a company that has a strong, sustainable business model that customers have continued to react to, as your daughters do, over a very long period. Jim, 13 of the last 14 quarters for Panera through the recession have been up north of 20%. And a whole bunch of those quarters have been up almost 30%.
Well, the thing that really astonished me, Ron, was that you got your labor costs down, not a little bit, but dramatically in a quarter. What can a company do to get their costs down so much in 3 months?
Hey, it's all about sales. Right. Literally, it's what drives the whole thing. If you have the sales, you're going to get leverage. If you don't have the sales, no amount of cost control can save you.
Now, you also did remarkably in terms of you actually had bad food inflation, but you were able to exceed that in terms of your, right? You were able to put through price increases and whatever. You had 160 basis points of bad food inflation. It didn't hurt you.
Yeah, I think it's simple. We always talk about living in a difficult environment with inflation, but if you have a product people choose, if they are willing to come to you, they're generally willing to pay what is considered reasonable prices for that. And I think there's a real falsehood that occurs in my industry and in many industries that value in people's minds equals how cheap it is. It isn't. It's what you get for your money. And I think where Panera has been focused through the recession and through the economic weakness is in continuing to drive market share, putting more on the table for guests. And when we do that, we get the sales. When we get the sales, we get the leverage. And you see the kind of quarters we've been generating now for many, many years, the kind of quarter you saw this last quarter that was up.
Also, Ron, you raised your new unit target to 110 to 115, 10 to 15 more than original range. I know you guys don't do this idly. That's a big move, isn't it?
Yeah, well, it's simple. Our franchisees are building more stores. Right. They respond in the same way. They're responding to the return on investment. And the truth is, Jim, we have never opened stronger stores than we opened this year to date and what we opened last year. And if you realize that we're in a weak economic time, real estate costs are down over the historic highs by 15 to 20%. Development costs, that is the cost of construction, are down 10, 15%. And you recognize that these average weekly sales, the new stores we're opening are opening at increasingly higher volumes because it's a strong concept. You gather that the ROI of those new stores are going to be some of the best that have ever been built in the history of Panera. Our franchisees react to that. They build more stores, so does the company.
All right, now you bought back 850,000 shares. Very unusual in the sense that that little amount of money actually was very accretive to earnings. Why did you decide to go in? Because I always think it's better to try to grow. You've got a great growth business. What? This just seemed like your stock just didn't make sense at the levels it traded at?
No, again, everything we do is in a medium to long-term perspective. And we have been operating under a $600 million authorization from our board to buy back stock. We have been buying as appropriate within that for the last year and a half to 2 years. We've bought approximately $334 million, I believe it is, of that $600 million authorization. And when we see weakness in the stock, we move in and we buy it. We're here for the long term.
Well, I'll tell you, you really are. It's been a great long-term win for us. And for all the people watching, I know a lot of people, when I go there, they say, thank you for getting me in the stock. Ron Shaich, you've done a remarkable job. I know I'm so glad you're still sticking with the company. I was so worried when you retired as CEO, we never see you again. But you're sticking with it. You're founder.
Oh, no. Jim, I'm working at this thing. I used to work at it 7 days a week. I'm now at it 5.5 days a week. And with our CEO, Bill Moreton, we have got a crack team. My focus is on the long term. He's running the business, and you see the results.
Well, you've done a great job. Thank you so much for coming on the show. Congratulations on being up 17. Biggest gainer today. Great to see you, sir.
Thank you, Jim.
All right, that's Ron Shaich, founder and chairman of Panera Bread. And I got to tell you guys, this was the kind of quarter I saw from Chipotle, I saw from Whole Foods, I saw from Starbucks, and I saw from Panera. What do they have in common? The customers love them. Stay with Kramer.